Hello and welcome to Earth911's Sustainability in Your Ear, the podcast conversation about accelerating the transition to a sustainable carbon neutral society. I'm your host, Mitch Ratcliffe. Thanks for joining the conversation. Electrification of the nation's buildings, moving them away from heating and energy generated from fossil fuels, is critical to achieving the carbon emissions reductions set for 2030, as well as to reaching net zero emissions by 2040 or 2050. About 40 million Americans lived in apartments as of 2019, and they must rely on their landlord to make investments to electrify the building they live in. Our guest today is Owen Barrett, co-founder and president of Rayven, which is working to make it easy for individuals to invest in apartment buildings and energy upgrades to accelerate the conversion of America's rental homes to energy-efficient heating and cooling using renewable energy. Rayven, which is spelled R-A-Y-V-E-N, Rayven is using crowdfunding to allow people to invest in modernizing apartment buildings for as little as $250. Now, rents have been rising precipitously. The cost of a square foot of apartment space was up more than 100% between 2010 and 2020, according to the National Multifamily Housing Council. And that's because of a growing shortage of apartments. Many people may be thinking they want to invest in apartments, and we have the opportunity to lower the nation's greenhouse gas emissions in the process if we make a concerted effort. Rayven identifies buildings to acquire, then invests in energy efficiency improvements and solar power to increase the profitability of the building. This is new territory, and there's a lot to talk about, so let's get this conversation started. You can learn more about Rayven at joinrayven.com. Join Rayven is all one word, no space, no dash, and Rayven, again, is spelled R-A-Y-V-E-N. So check them out, and let's get to the conversation. Hey, welcome to the show, Owen. How you doing today?
I'm doing great. Thanks for having me.
Well, it's great to have you here and to talk about what you're doing with Rayven. Tell me about how your career started. You've been through some interesting facets. You were an energy manager for a large company. You founded a company that helps school districts implement energy efficiency and renewable energy programs. And you've been in a capital management or investment management company. What did you learn from all of that made you think, wow, fractional financing of electrification of apartment buildings is going to be a great business?
Yeah, it's pretty interesting, right? As you're going through your life, you take all these twists and turns and you don't really know where you're leading, where you're going. Mm-hmm. But then when you get to a place that just feels right and you look back, all the dots make so much sense. And so I started, in a traditional finance role. I was doing a lot of analytical jobs in Excel, and really enjoyed the Excel work and sort of understanding how to use money to drive decisions. But I really did not enjoy the financial industry. So I knew I wanted to get out. That was, 2008, 2009. Sustainability was not really an industry back then. So the only thing that was really a job opportunity was lead. And so I was trying to get jobs that had something to do with lead. My finance degree wasn't really a good fit. So I went to grad school for environmental science. I had this hope that I could kind of combine my financial acumen with something in corporate environmental management and help companies become more sustainable. And that's exactly what happened. I got a job as a Fortune 100 energy manager in San Diego. I got to work with really every cost-effective clean technology there is. So solar, storage, LED lights, HVAC upgrades, you name it, everything. And what I realized in sort of those 3 years as an energy manager is the private sector has all of the resources that they need to go net zero. It's really an internal decision. Do we want to? They can borrow cheap money. They have a lot of cash. They have the personnel. It's just a decision. And I saw that the public sector did not have that luxury. They didn't have the money. They didn't have the personnel. They needed a lot of help. So I wanted to take the experience that I got and focus on school districts in California. Started my first company called Lumio. And we ended up working with about 40 school districts across California in like 18 months, grew really fast. And it was awesome. But at the end of 18 months, I grew frustrated by schools getting in their own way. These decisions were being made by school board members that really didn't have a clue. They have no business background. They don't really have backgrounds in anything applicable to sort of running a huge organization. And it just got frustrating. So I ended up exiting Lumio, had a little bit of time to sort of figure out, all right, what do I want to do next? And at that time, I had been in sustainability for probably, 8 years. And I started to get this internal hypothesis that we have most or all of the technology that we need to get us out of this mess, but we just can't, society cannot figure out how to deploy it fast enough. And so I started thinking about that exact problem and landed on the solution of, if I'm the building owner, I can do whatever I want as fast as I want. I can decarbonize the building in the first week if I want to. I don't have to convince anybody that it's the right thing to do. I don't have to convince anyone that the economics made sense. I just do it. And so that was 2017. And that was sort of the origin of, let's shift from trying to help other organizations implement their sustainability initiatives. Let's become a mass owner of real estate and just decarbonize everything we own. And that was a big moment.
So can you describe, you talked about the LEED standard sort of being not to make a pun, a leading indicator of the fact that buildings are going to become sustainably managed. What is the state of electrification of apartments in the United States right now?
I would say zero. I mean, I take that back. Like, we occasionally, it's low. It's very low. I would say under 25%, probably under 10%. We occasionally find all electric buildings, which is great for our business model because it's really easy to convert to net zero. But historically, there's a lot of funny business going on in the real estate world, even down to development. If you try and build an all electric building, gas companies are lobbying city council to not approve the plans because they want gas brought to the property because they see that as a big problem. It's the same thing that's happening now with, the push for electric stoves. It turns out they cook food better. They're a lot healthier to have in your home, but the gas industry is doing everything they can to convince people otherwise, that they're not a good option. And so the result of that over, 100 years is that most buildings have gas and electricity. So that's why we see this Inflation Reduction Act being so important, because there's a ton of tax credits and rebates that are going to help building owners electrify if they choose to.
Now, I did a little research too, and what I found from Harvard's Kleinman Center for Energy Policy is that home heating in apartment buildings is at about 40%. That doesn't necessarily mean 40% also is cooling. There may be a variety of different technologies involved.
Yeah.
When you look at the marketplace of apartment buildings right now, where do you generally invest and what kinds of buildings are you seeking to acquire?
Yeah, we look mostly in the Midwest, so sort of the belt between North Dakota and Texas. And the reason why is for Rayven, we seek cash flowing properties. So we want to buy assets that are cash flowing day one. They're existing, they're occupied, they're cash flowing. It's our job to make them cash flow more. But through that model, we can start paying Rayven investors almost immediately. So that's really important. It's generally harder to find cash flowing assets outside of the Midwest because a lot of those owners are banking on appreciation to make their money, which I'm not a big fan of that model. So we look for the Midwest, we look for garden style apartments. So generally 1 or 2 stories. That's really important to us because we want sort of the greatest roof area to number of units ratio that we can find, because it's a lot cheaper for us to install rooftop solar than it is solar in the parking lot. So if we can find properties that have a lot of roof space relative to how many units there are, it's easier for us to go net zero without carbon offsets or credits with just rooftop solar, which is more economical than parking lot solar.
So as you described it, and I tend to agree, the private sector can be a lot more decisive, right? Your investors are giving you the resources to make these decisions and apply the technology in these buildings. How can you lay out how your financing strategy is different from the traditional approach to building management or REITs?
So I found a couple things early on in my sort of real estate career. Solar, there's a lot more technologies beyond solar that we do to our buildings. We do a lot of energy efficiency before we do solar, but energy efficiency changes property to property. So you can't really put like a blanket statement on what type of energy efficiency we do because it's different. Solar, though, is sort of universal. We always put solar on our properties because that's the only way to get to true net zero. So I say that because when I first started in real estate, I tried to start a consulting company to help other real estate owners install solar. And it was a huge failure because most people just don't care. They don't care. Their business model doesn't need it. They're hitting, at the time, they were hitting high teens returns to their investors without it. So to them, it was a risk and something that they didn't have to do. So we knew it had to be like integral to our business model. We also knew that retail investors generally don't know how to make the same kind of returns as institutional investors. So you may have really savvy real estate investors that demand like a 17% IRR, but your average, blue collar worker or white collar worker that doesn't spend a lot of time in investing will take a 10% return. That sounds pretty good. That's better than they're going to get in the stock market a lot of years. So we deliberately designed our model to have a low barrier to entry. So it's only $250. We wanted most people to be able to invest if they could. And we wanted to have a double-digit return because we felt that that was a really bold statement. You can invest in net zero real estate and get a double-digit return for as little as $250. It seemed like a message that would resonate with a lot of people.
I want to talk more about some of the risks involved in this later in the conversation, but let's talk to what you do when you acquire a building. So you identify the building, you do the due diligence, you buy it. What happens next?
So a big piece of what we actually do is in the due diligence. So part of the reason that buildings are not being decarbonized is because of the standard process of how you buy a building. So you underwrite a building. Someone underwrites a building. They decide we can afford to pay, $10 million for this building. Then you go and do it. Usually you get the property under contract. You go do a DD visit. What most people are building out in their capital expenditure budgets are what I'll call superficial renovations. So they're putting in new floors, they're doing paint, maybe light fixtures, really things that justify, in air quotes, raising rents. So that's the main play with multifamily real estate. What we do is in that due diligence trip, we do that same superficial budgeting. We also budget all of our energy efficiency and on-site renewable energy. And the reason that is important is the commercial financing options for energy upgrades are really bad. There's not a good market out there. The interest rates are too high. The amortization is not long enough to allow these projects to cash flow for multifamily. And so by building it into our CapEx budget at the beginning, we're raising the debt and the equity that allows us to implement the projects as soon as we close. Whereas if you close on a property and then you decide you want to do all these projects and you start building out the budgets, now you have to figure out how to also finance them in a manner that makes sense. And that's nearly impossible.
So by bundling the entire cost of the transition into the acquisition, you can pencil out what the return can be over time and make a confident decision and act. So what do you also are lowering the cost of operating the building, as I understand it, by changing the cooling systems, the putting in insulation, adding control technology in order to optimize energy performance. What would you say the most effective investments in energy efficiency are generally? And this is something a lot of our listeners are curious about for their own homes or to talk to their landlord.
So I would have had a totally different answer pre-Inflation Reduction Act, but post-Inflation Reduction Act, which is sort of the world that we're living in now, it's like pre-IRA and post-IRA. It's actually really exciting. So before, you used to have the split incentive problem. If I own a property, it can be a small or huge property, 4 units or 400 units, and I replace all the windows. So I go from single pane to triple pane. All of those energy savings are going to the tenant. As the owner, I'm not going to do that. I'm not going to spend my money to benefit the tenant. As terrible as that sounds, that's the reality. What the IRA has done is it's recognized the split incentive problem, and it's developed tax credits and rebates to address this. So now there's money available for electric appliances. There's money available for windows, for insulation, for everything that sort of is at the core of the split incentive problem. The IRA does a pretty good job addressing it. So I think, smart thermostats are a huge opportunity for most multifamily owners. That's a really, really cost-effective way to have a huge impact on your energy savings. So I say from the efficiency standpoint, it's probably air sealing and smart thermostats, lighting, but lighting can get kind of complex and expensive. But then the other really interesting thing that we've done is we've recognized the split incentive problem for solar. So if we have, 10 unit property and all those 10 tenants have their own electric meter and they're the ones paying the electric company. If I install solar, they get the savings, and solar is expensive. I'm not going to do that. So we've developed proprietary software to help us monetize solar on tenant meters, which is going to open up this whole world that otherwise is impossible outside of a couple states. A couple of states have something called virtual net metering that addresses it.
We've talked a little bit in the past. So what you're saying is that you create a microgrid, you manage it, and that allows you to share the savings with the tenants. Is that correct?
Yeah, it more so, we'd love to go the microgrid direction. That one's a little hard to justify from a cost perspective right now. It's more so a system that allows us as the owner to monetize the energy created by on-site solar, which historically is benefiting tenants.
Okay. And can you talk a little more about how the IRA has changed that split incentive situation? So you're saying now that a landlord can make these improvements and share in the benefits. How is that? Is that by selling the electricity to the tenant, or is that by?
Yeah, more with the renovations. So again,
Okay.
a traditional value add multifamily owner will buy an asset that they see is below market rent, where they could push rents to market if they do some level of renovations.
Right.
Those renovations are generally, new floors, new paint, new appliances. Maybe they do something with the HVAC if the HVAC's really old, new lighting. And so a lot of that, there's synergy with energy efficiency, right? You could put in energy efficient appliances. You could go from gas dryers and gas stoves to electrifying the unit and putting in electric dryers and electric stoves. But historically, that's been really expensive and there's no value to the owner. So what the IRA does is it says, okay, you're going to do these renovations anyway. You're going to put in new appliances. You're going to put in floors. You could electrify if there was an economic reason to do so. So we're going to pay you through rebates and tax credits to electrify and make more efficient your renovations that you're doing anyway. So to the owner, it makes the CapEx less for these renovations, which in theory should increase returns to investors.
So a direct incentive is in place where in the past you had to essentially speculate that you would be able to make more money by installing green technology.
Yeah, exactly. It makes the renovation costs less for something that you would do anyway, if you change the scope a little bit about what you're renovating.
Okay. This is a great place to take a quick break, but I want to come back and talk more about how then the investor sees a return. We'll be right back. And now back to our interview with Owen Barrett. He's the co-founder and president of Rayven, a green apartment building investment company offering fractional ownership to small investors. Owen, now that you have a building and it's energy efficient, we're talking about the ability to install solar and the fact that you generally get relatively low profile buildings. So there's a high ratio of solar capacity to apartment units. Is it always possible to install solar? And what do you do if it isn't? Does that building just not make the cut in the first place?
It's not always possible. We target properties where it is always possible. So that's one of our main criteria in our due diligence is we look for properties that have a lot of roof space, a lot of roof area, that don't have a lot of shading issues, and where the roof is less than 10 years old. Ideally, you can get around the roof situation as long as the seller's willing to kind of be flexible on price to address the fact that you probably need to replace the roof. But for us, it's one of the core things that we look at before we buy a property is that property suitable for solar? Because our mission is to make every single property we own true net zero, which is net zero on site without any offsets or carbon credits.
So would you say that city centers are actually disadvantaged in this situation because they tend to be high-rise buildings and therefore a low solar to apartment ratio? They just would never make the cut?
They wouldn't make the cut for us. I mean, there's a lot of efficiency work you can do for high rises or mid rises. But for us, solar is an integral part of our business model. So we don't look for those types of properties. It's something interesting that's happening for mid-rise and high-rise tenants is this push for community solar,
Right.
where tenants are able to sort of elect into getting energy from solar that's not on site their property. So that's an interesting angle for tenants, but for us, it's not it's not what we look for a property.
So if a city began to really implement renewable energy, would that make buildings that were in that city more attractive to you, even though they couldn't support solar in the way that you're describing?
Not really. I'm a little bit of an elitist in the sense that I think the best way to go net zero is on site.
Mm-hmm.
So I think it's the most efficient way. You have the least efficiency losses. If you have a utility scale solar farm 100 miles away from a property, there's a lot of efficiency losses. It's not the best option. Now it's the only option for some tenants in some buildings, but we just don't look for those. So we don't really, like, in a perfect world, we would be buying properties in grids that are sort of the dirtiest from a CO2 per kilowatt hour metric. But we're not that picky. It's hard enough to find deals that cash flow that makes sense from a financial perspective that then you can go and decarbonize, where we can't add another level of scrutiny. It's something we'd love to do in the future, but we're not there yet. We don't have the ability to do that.
I'm curious if other solar technologies, like thin films applied to the windows or paint on solar panels, could change that estimation, in your opinion. Do you think
Yeah.
that solar technologies will make apartment buildings more energy self-sufficient?
Yeah, I think there's a lot of really interesting opportunities. I mean, I've seen some early concepts of glass, the glass that's basically clear PV. I think that would help mid-rise and high-rise. I mean, I think there's a lot of really exciting technology out there that could have an impact down the road, but we're really focused on having an impact like as fast as we can. I think time is one variable that we're short on. And so we want to do as much as we can, as fast as we can, and not rely on new technology coming down the road.
So let's talk about how the investor participates in this. You can raise rents, you can lower the cost of operating the building. Both of those fall to the bottom line, so the investor is making more money. And as you said, you're promising a 10% or better return. How does Rayven's model create and distribute its profits, and how does the investor see into how you do that?
Yeah, so I'd say the main problem with our model right now is there's a little bit of a lag. We have to raise enough money that we can purchase a property. So from the day an investor invests, their interest starts accruing, which is great for the investor because there's no, opportunity cost for investing. But we do have to raise enough money, which is usually millions of dollars, before we can acquire a property. Then once we acquire the property, there's a bit of a stabilization process in terms of, new management, new ownership, just making sure we really understand the property. So we like to tell our investors that we'll start distributing interest payments within a year from their investment, but their interest does accrue. So there's a bit of a lag between the time that they invest and when they start getting paid, but we make them whole throughout the entire hold period. And we're currently paying quarterly. We'd love to move to monthly, but that's sort of probably a 2024 goal.
So are you always raising money for the fund, or do you do essentially like a Kickstarter campaign around a building in, say, Des Moines?
Yeah, we're trying to raise $75 million, which is the maximum allowable raise for a Regulation A plus offering, which is the exemption that we're using through the SEC to raise money. But we don't need to raise the full amount before we can start deploying it. So once we have enough money to make an acquisition, we'll make the acquisition, and we're continuing to raise money through our marketing campaign. So it's sort of a rolling fund, if you will.
And how long should an investor expect Rayven to hold their money in the first place?
We're targeting 5 years, but we also put in our note, our promissory note, that there's got to be some flexibility around that hold period. the last thing we want to do is be forced to sell in 5 years if it's a down market.
Mhm.
So the market conditions have to be right for disposition, but we are targeting 5 years.
And can somebody sell their position before Rayven pays out that final?
Not yet. That's probably a 2025 goal. So we're exploring some like tokenization ideas to offer liquidity and kind of create a second market for Rayven investors, which would be really cool and really fascinating, but it's not our focus right now. That's something we'd like to do in the future.
Now, obviously, all investments are at a risk. What are the risks that you need to disclose to a Rayven investor before they jump in?
I think the biggest risk, well, I'll start off with, we're trying to de-risk our investments as much as we can, but I mean, it is true. It is an investment. There are inherent risks. We're buying existing cash flowing properties in fairly stable markets. So the Midwest typically doesn't go up and down. It doesn't crash and burn as often as the coasts. And we're using responsible debt, which is low leverage, fixed interest rate. So I'd say the biggest risk is probably that the hold period is either shorter or longer than 5 years, just based on market conditions. Those are things that we can't control. So there are risks that the investment won't go as planned, but we're doing everything that we can to make it as safe as possible.
And as you look at the inventory of apartment buildings in the Midwest, let's say, what percentage of these buildings do you think as a society, not just Rayven, but as a society, we can convert over, say, the next decade or two?
Oh man, probably 90%. I mean, this is a multi-trillion-dollar opportunity, and we recognize we're not going to do it all at Rayven. We need other multifamily owners to jump on this boat. Tom Steyer, the billionaire, recently launched a company called Galvanize Real Estate, I think, is doing exactly what we're doing, which is great to see. There's a huge, so one of the statistics we like to tell people is buildings account for 40% of global greenhouse gas emissions, which most people are not aware of. They would point to transportation or agriculture as the biggest culprit. It's actually buildings, the built environment. And then the other interesting thing is that of all the buildings that exist in 2040, 2/3 already exist today. So if we don't start decarbonizing existing buildings now and very quickly, we're never going to have a dent on the biggest piece of sort of the greenhouse gas pie. And so that's why we're so focused on existing buildings, and we hope that other owners will kind of jump on board. I think the Inflation Reduction Act will help that. But it's still, that's going to take some time to gain adoption. It's really unfamiliar. People don't know about the benefits. So I would expect that 2 to 3 years from now is when multifamily owners will probably start to decarbonize alongside with us.
When you say 2 to 3 years, what do you think the catalyst of that trend, that realization is going to be? Is it going to be driven by the opportunity to make a profit, or is it going to be a stark recognition that, man, if we don't make this change, there won't be people to put in these buildings?
I think, unfortunately, it's the stark recognition that there's an opportunity to make more money. We've known about climate change for a long time, and we're not really doing much. So I don't think the risk of climate change is enough of a driver. That's a really sad thing to say, but I just think it's true. I don't think we're going to see mass adoption and mass change across any industry unless profit motives behind it. That's just the unfortunate capitalist world we live in.
How does Rayven evangelize the idea, and where are you talking to people about converting their buildings? This is not just get individual investors in. It's also about bringing all of these built environments into the conversation. What are you doing to reach out?
We have our own podcast called Climate Rebels. We're very vocal about the opportunity out there with the built environment. I would say once a month, maybe more, we have conversations with really large asset owners. I'm talking like 50,000, 100,000 apartment units about how to actually decarbonize. So the unfortunate part of the commercial real estate world is most owners have sort of shifted towards carbon offsets and carbon credits for their net zero goals, right, which I would argue is not a real solution. So now the focus is on, okay, we've sort of done that, and some companies have gotten some public blowback. So how do we actually decarbonize on site? And so we're open to having conversations with any owner about how to do this. You know, nothing is proprietary besides our software. We're an open book. We will tell everyone our entire game plan about how we do everything, because we need other owners to get on board and start doing it with us. So it's a lot of word of mouth. That's kind of the best we can do right now.
Well, and we have to get out of this together. It's not something where you'll fight over the victory. The spoils of this are that.
And there's so many buildings that I mean, maybe there's some competition out there eventually, but I don't know the exact number, but there are so many apartment buildings that can be decarbonized, that we don't really see it as competition. It's a collective effort.
Do you see the opportunity to work with those owners and bring some of your capital with the proposal that they could improve their buildings? In other words, do you always have to own the building 100%, or could you start to syndicate these deals more?
So right now we are the owners. That's our model. I think what we'll start to see is we'll probably license our software to other owners. There's really no way. So there's a couple states, California and New England, that have something called virtual net metering. Some people call it virtual meter aggregation, which really allows apartment owners to install solar. And that's great. The problem with that is it's only California and New England. So there's a lot of the US where you cannot install solar. So that's what our software addresses, is everything outside of California and New England. I would expect that once word gets out, and we're not really publicizing the software, we're just doing it internally for our own purpose. But I think once word gets out that there is a way for owners to monetize solar on their apartments in the rest of the country, we'll probably start a licensing model with that and kind of partner with the owners to help them think through that. But I don't really see a world where Rayven investors are investing in other companies' buildings, because we want to make sure that we're protecting our investors. We're doing what's best for them, because there's a lot of scrutiny with the SEC where we don't want to get, in any situation that we shouldn't be in.
Now, the other factor in the Midwest is the politics. But I've also found that in a lot of red states, once people see that they can make a lot of money by being sustainable, there's not a lot of resistance. However, the politics is often actually counterintuitive or literally counter progress.
Yeah.
What do we have to do to get those states to jump in and participate, or at least stop resisting this transition?
I think, I hate to say this, but I think it all comes down to money. So there's sort of this concept floating around now called virtual power plants. Are you familiar with that? So VPPs are going to be a huge part of the future, right? The Inflation Reduction Act is incentivizing electrification of buildings, electrification of transportation. That's going to put a huge strain on the grid in terms of demand. I think the grid is expected, or electric demand is expected to grow 60% through 2030, which is a massive increase. We haven't seen that kind of increase since the 80s when we started to put air conditioning everywhere.
Right.
And so now utilities have two options. They can build new gas peaker plants, which are super expensive and super dirty and result in high rates for customers. Or they can incentivize virtual power plants, which instead of increasing supply, curtails demand, and you can actually pay your ratepayers to curtail demand. So I would hope that as utilities are starting to, look at their energy demand forecasts, they're not only looking at building peaker plants, but they're also evaluating VPPs, because it's a win-win. Utilities make more money, ratepayers paid. It just has to be a part of the future.
Owen, this is a very encouraging conversation in one sense, but I hear this wall of resistance too that you're describing. As you think about where we will be in 2035, what realistically are you looking to see these Midwestern states do in terms of the transition? Will there be a wholesale change, or will it still be more incrementalism?
Unfortunately, I think it's going to be very small scale change, but that's not necessarily bad news for apartment owners. I mean, again, I live in this microcosm of like a multifamily real estate, so I can't really speak to other asset classes or other things going on. I think EVs are going to take over everywhere. I think the second, a Republican or someone anti any whatever buzzword you want to use drives an electric car, the whole like liberalism woke ESG thing is out the window. They're just like, this is a better car. It's better. It's more fun to drive. I could charge it for free if I get solar. So I think EVs are going to take off everywhere. But for apartment owners, you can install solar in any state, literally any state. We've done the analysis, and at worst, it's a break even. Meaning, so for commercial real estate, the way that value is calculated is you take your net operating income, which is sort of like net profit, and you divide it by a cap rate, which is like the unlevered return. So if you were to buy the building all cash, what kind of return would it kick out? And that's how you understand the value created. So if you have solar that's, say it costs $1 million and you're save $100,000 a year and you're at a 5 cap rate, you divide 100,000 by 0.05 and you get a $2 million valuation. So you've installed solar for $1 million, but you've increased your property by $2 million. In every state we've looked at, the worst solar is a break even, meaning you install $1 million of solar and you've increased the value of your property $1 million. The best case is like a 20% return on cost, which is really good. You can do that anywhere right now. You don't need utilities to let you do it. You don't need them to change anything. That is available today for multifamily owners. So I'm just in this opinion of, we do need things to change, and we need things to change quickly, but there's so much that can be done now that isn't being done regardless of regulatory change.
So how can folks listening right now get involved and make an investment?
Join Rayven.com. So it's Rayven with a Y, Rayven. I'm on LinkedIn a little bit. So reach out there, reach out online. One of our team members will get back to you, but we're excited to have conversations. We're just excited to educate people about this opportunity, and really just spread the message about what's available out there.
Well, thanks for spending time and spreading the message with us today.
Yeah, thanks for having me.
We've been speaking with Rayven co-founder and president Owen Barrett, and you can find out more about their fractional apartment building investment opportunities at joinrayven.com. Join Rayven is all one word, no space, no dash, and Rayven is spelled with a Y, Rayven. So about 20% of U.S. energy-related greenhouse gas emissions are produced by home heating, cooling, and electrical use. And of course, a fraction of that are apartment owners. The benefits of electrifying those apartments, which account for about 15.8 million U.S. households, would reach all of us in the form of lower overall emissions, which will reduce climate change and global warming. But it'll also make those renters more comfortable. And as a distributed solar-powered infrastructure can also prevent rolling blackouts that threaten to cut off heating or air conditioning throughout the year in the United States. And electrified infrastructure can be a more resilient one we can all count on performing more reliably. Now, fractional investment grew out of the move towards crowdfunding that began with the rise of digital technology, and it represents the potential to democratize real estate ownership and its benefits. Housing is an asset with undeniable value. It's more tangible than gold because you can rent out an apartment to generate income. You can't rent out gold very conveniently. Reliable real estate investments can be the basis for ongoing taxable income in a diverse portfolio of assets. But please, folks, remember that every investment carries risk of loss. So do your homework, but take a moment to check out Rayven and see what you think. I hope you also take a moment to share this podcast or any of the more than 420 interviews we've done on sustainability in your ear. Folks, please take a moment to write a review on your favorite podcast platform to help your neighbors find us, because you are the amplifiers that spread more ideas so we can create less waste. Tell your friends, family, your coworkers, the people you meet on the street that they can find us on Apple Podcasts, Spotify, iHeartRadio, Audible, or any of the other purveyors of podcast goodness they prefer. Thanks, folks, for your support. I'm Mitch Ratcliffe. This is Earth911, and we will be back with another innovator interview soon. In the meantime, folks, take care of yourself, take care of one another, and let's all take care of this beautiful planet of ours. Have a green day.